If you're thinking about buying a car in 2026, there's one thing you absolutely need to understand before you walk into any dealership: how car financing actually works right now and how the current market could cost you thousands of dollars if you're not prepared. Stay with me, because by the end of this video, you'll know exactly what to expect and how to protect yourself. Let's start with the numbers. Right now, Americans owe a staggering $1.65 trillion in auto loan debt. That's more than student loan debt. The average new car transaction price has crossed $50,000, and the average amount being financed for a new vehicle is around $42,000. For used cars, it's about $27,000. These aren't small numbers, and they matter because they shape the terms of every loan being written today. Now, the good news, and yes, there is some. Interest rates on auto loans have been slowly coming down after hitting painful highs in 2024 and 2025. Analysts expect rates to continue their gradual decline through 2026, which gives buyers a little more breathing room. But here's the catch. Even with lower rates, car prices are still high, insurance costs are still high, and the total cost of owning a car remains very elevated. So don't expect a dramatic relief. Modest improvement, yes. A car buying revolution, not quite. To put it in perspective, if you have excellent credit, or what lenders call super prime, you might qualify for a rate around 4.9%. But if your credit score is on the lower end, that rate can jump all the way to nearly 16%. That's a massive difference in how much you'll pay over the life of the loan. Here's something most people don't talk about enough. Loan terms are getting dangerously long. The average new car loan is now almost 70 months. That's nearly 6 years. And for borrowers with mid-range credit, some loans are stretching past 84 months, 7 years, to keep monthly payments manageable. The average monthly payment for a new car is now $748. For a used car, it's $532. The problem with long loan terms is that cars depreciate fast. The moment you drive off the lot, your car loses value, but your loan balance goes down slowly. This means millions of Americans end up underwater, owing more on their car than it's actually worth. In fact, nearly 30% of trade-ins in late 2025 were underwater, with an average negative equity of over $7,000. That's a financial hole you carry into your next purchase. So, where should you finance your car? You have three main options: the dealership, a bank, or a credit union. Here's the key thing to know. Never walk into a dealership without a pre-approved offer in hand. Why? Because when you come in with your own financing, you have negotiating power. You're not at the mercy of the dealer's in-house rates, which often come with a markup built in. Credit unions are frequently the best option for competitive rates. Banks are a solid second choice. Whatever you do, get multiple quotes and compare the APR. That's the annual percentage rate, not just the monthly payment. A low monthly payment with a long loan term can actually cost you far more in total interest. Now, let's talk about what kind of car to buy. In 2026, the EV market is more accessible than ever, with affordable electric vehicles coming in under $40,000 from brands like Hyundai, Chevy, and Ford. Federal tax credits of up to $7,500 are still available for qualifying vehicles, and charging infrastructure is expanding rapidly. If you're open to going electric, it's worth exploring, especially with state-level incentives on top of federal ones. If you're considering a used car, certified pre-owned vehicles offer a sweet spot. They come with manufacturer-backed warranties and inspections, making them a safer bet than buying from a private seller. Just watch the interest rates on used car loans, which tend to be higher than new car rates. And if you're eyeing a brand new 2026 model, check if manufacturers are offering special financing incentives. Automakers frequently run 0% or low interest deals for buyers with excellent credit, especially on shorter loan terms. Let me leave you with the most important things to do before you finance a car in 2026. First, check and improve your credit score. Even a small improvement can save you hundreds of dollars a year in interest. Second, get pre-approved before stepping into a dealership. Third, negotiate the vehicle price separately from the financing. These are two different conversations. Fourth, avoid stretching your loan beyond 60 months if at all possible. The longer the term, the more you pay in interest, and the longer you stay underwater. Fifth, factor in the total cost of ownership, insurance, maintenance, fuel or charging, and registration fees, not just the monthly payment. Car financing in 2026 isn't simple, but it doesn't have to be overwhelming either. The market is slowly improving, but the fundamentals haven't changed. The better prepared you are, the better deal you'll get. If you found this video helpful, give it a like, subscribe for more, and drop your questions